Hello there, you're watching the Business Today show. I'm Sneha Mordani. Let's get started with the top stories in this edition first. Cars also to get costlier this month. Maruti sets the stage with a near 1% price hike. Tata and Honda likely to follow suit soon. New tougher emission norms force car makers to pass increased production costs to customers. International crude prices jump as much as 8% after oil cartel OPEC announces a surprise production cut. Big worry for policy makers in India, which imports 85% of its crude oil needs. Markets end in the green for a third straight day. Sensex up 115 points to close above 59,000. Nifty up 40 points as OPEC production cut weighs heavily on the street auto index. Zoom on March sale figures. Major outage hits SBI digital services. Customers complain of failed UPI net banking transactions. Social media packed with stories of users who say they have not been able to use services since Sunday. Economic chaos in Pakistan. Inflation zooms to highest levels after recorded in the country. Food prices surge 50% in March, 20 dead in food line stampedes. Maruti Suzuki has set the stage for another round of price hikes. The country's largest automaker hiked prices across the board over the weekend. Other companies are expected to follow suit soon, thanks to higher input costs as well as stricter emission norms.
Cars are rolling off the showroom floors. Customers are willing to wait for months for their cars. The car market in India is red hot. For Maruti, the time was right to strike while the iron was hot. India's largest car company raised the prices of its model by an average of 0.8% this weekend. This is the third hike by Maruti in the past 1 year. Maruti had increased prices of its cars by an average of 1.3% last April and then again by 1.1% in January, making it a 3.2% overall hike in a year. The hike comes on the heels of the strongest annual sales the company has till date. Maruti sold a total of 1.97 million units in the financial year 2022-23, beating its previous best of 1.86 million units in 2018-19. The intervening years saw a dip in sales due to COVID and other reasons. For Maruti, it's been a spectacular recovery. Thanks to its newfound focus on SUVs, the company was the king of small cars, a segment which was rapidly losing relevance. Maruti switched gears, launching the hugely successful Grand Vitara. The Fronx and the Jimny, displayed at the Auto Expo this year, are to be launched in the next couple of months. Meanwhile, Tata Motors and Honda have also announced their intention to hike prices this month. While Tata is raising the sticker price by as much as 5%, Honda is expected to affect a hike on some of its models. Hero Motor Corporation, the biggest two-wheeler manufacturer in the country, is likely to raise prices by as much as 2%. The biggest reason for the price hike is the transition to BS6 Phase 2, which kicked in from the 1st of April. The transition involves stricter emission standards, leading to higher production cost. Companies are also passing on higher raw material cost. What's gone largely unnoticed is the withdrawal of several models by car manufacturers. The plug has been pulled on Honda City Diesel, Mahindra Marazzo, Mahindra KU V100, Hyundai i20 and Verna Diesel, Skoda Octavia and Superb, and a few other models which did not comply with the new real driving emissions (RDE) norms. Bureau Report, Business Today Television.
Business Today Television's Chetan Bhutani spoke to Maruti Suzuki about the price hikes as well as the revival in the sales. Here's an excerpt from his conversation with Shashank Srivastav, Senior Executive Officer at Maruti Suzuki.
Maruti Suzuki has come out with its annual set of numbers for the financial year and of course for the month of March. and I'm joined by Mr. Shashank Srivastava. Thank you, Shashank San, for speaking to us. Give us a
Thank you.
wholesome picture of all the numbers and the good, bad, and the ugly.
Well, this year which went by, April to March, if you're talking about the financial year, has been really good for the industry. Industry numbers, 38.9 lakhs compared with the last year's number of 30.7. So that's a very good increase of almost 27%. Both on the wholesale and the retail, both are record and the highest ever numbers for the industry. As also for Maruti Suzuki, the total numbers for this year, 19.04 lakh. I'm talking only of Maruti Suzuki. I'm not including the numbers which we are supplying to the OEMs, other OEMs. 19.04, including the highest ever export of 2.59 lakhs, compared with the previous highest of 18.62, which was in 18-19. So that's a good jump, and I think this has been done despite the fact that we have had issues relating to the semiconductor problem, which still continues. So all in all, very good numbers. 7 out of the top 10 models from Maruti Suzuki, 4 out of the top 4 models are Maruti Suzuki, and WagonR, number 1, number 2 is Baleno, Swift, Alto, and then Swift. So overall, I think it's been a good year so far.
Right, and sir, I was seeing the numbers. The dispatches to dealers in the market is also down about 3%. Any reasons for that?
So March numbers, as I said, is all dependent on both the availability side and also managing our inventory, the factory as well as the dealer network. So really, instead of going for the 1 month, I mean, this is a great time to actually look at the whole year, and that takes care of all the fluctuation which could happen because of production losses or inventory management.
Sir, if I come to semiconductor shortage, has it eased out? You mentioned it in the press release also that the company is facing some headwinds because of that. So when are we seeing this problem sorting out in this fiscal year?
Hopefully this fiscal year, but as we had mentioned at the time when we released the February numbers, that March would probably be impacted with the semiconductor issue and production will impact, and you have seen that getting impacted. In fact, you had asked some questions relating to March, which is like a specific time period issue. We see the effect in April as well, and this quarter. I think this problem will persist for a few more quarters. That's one. Second, if you ask me when it will become normal, I can honestly say that I don't know, because the visibility of the semiconductor related parts availability is just not there. So we get a weekly update, and accordingly we modify our projections, and that is what we can inform.
How are the commodity prices shaping out? Is there a price hike on the cards?
So we will be hiking the price today, as you know. We have already announced. But that is also related not just to the general inflationary increases, but also because of the phase 2 BS6 norms regulations, for which we have already converted all our vehicles. So that's the other reason why we have to increase the prices. Commodity prices, some commodities have softened, but on the other hand, some commodities are actually expected to harden, like steel, for example. Some of the rare earth metals, those have softened a little bit. But obviously, we have to keep watching which way the commodity prices move. Material cost obviously is a very important thing to watch for auto OEMs, because 75 to 77% of the overall cost structure for any OEM is material cost. So we'll keep watching the situation, but of course we have had a price hike today as well.
The 3-day meeting to decide the next course on interest rates began today. With Tuesday being a holiday, the RBI's Monetary Policy Committee will be meeting today, Wednesday and Thursday to decide the central bank's strategy on inflation and growth rates. The RBI has in the past 11 months targeted inflation by raising interest rates 6 times, from 4% in May 2022 to 6.5% in February this year. The fastest pace yet of increase in the cost of money. However, with high interest rates challenging growth and creating problems for banks in the US and Europe, analysts are expecting the pace of interest rates hikes to slow or even pause in the coming months. Polls by various agencies predict a 25 basis point hike on Thursday by the RBI. Let's now take a look at what's making news in the SpiceJet has hived off its cargo and logistic division, Spice Express, into a separate entity. The move is going to help the airline's balance sheet and wipe out a substantial portion of its negative net worth. Both companies will be able to raise funds independently. Shares of Uday Shivkumar Infra made a tepid debut at the Lal Street today, with its shares listing at a 14% discount on the NSE. The stock listed at 30 rupees against the issue price of 35 rupees. Ahead of the listing, the shares were commanding a marginal premium in the grey market. The company raised 66 crore rupees through the IPO. Zomato has announced that it has initiated the process of liquidation for two of its subsidiaries, Zomato New Zealand Media and Zomato Australia. These subsidiaries did not have any active business operations and their contribution to the company was 0.01%. The surprise production cut by OPEC weighed on the markets, which witnessed volatile trade today. However, positive cues from Asian markets helped prop up indices. Banking and auto shares led the gains and helped push Sensex up 115 points to over the 59,000 mark. Nifty closed up 238 points to 17,398. The biggest gainers in the Nifty 50 were Hero MotoCorp, Coal India, Bajaj Auto, Maruti Suzuki and Divi's Labs. The Nifty losers were led by Bharat Petroleum, Adani Enterprise, Apollo Hospitals, Infosys and ITC. March turned out to be the first month in the current calendar year when foreign institutional investors, or FII, money flow turned positive. They in fact showered nearly 8,000 crore rupees into the Indian equity market. Very different from their overall view in 2022-2023. Well, as we begin the new financial year, the big question is whether FIIs will return to the street. My colleague Sakshi Batra spoke to Avinash Gorarshakar of Profit Mart Securities to find out.
It could be a challenging year for investors of equities in FY24, and especially keeping in mind that there is always a macroeconomic uncertainty to look at as an overhang on the markets. One will have to really be selective about the positions they take and select stocks as well. Another important factor that I wanted to understand, in FY23 we actually saw 2.5 lakh crore rupees of bonanza record DII buying. That was a saving grace on D Street in FY23 for investors. Meanwhile, we actually saw foreign institutional investors becoming net sellers for the second consecutive financial year. They actually net sold shares worth over 40,400 crores this fiscal. What I want to understand is, will FIIs return this year? Can that be a supportive factor that one can bet on in FY24?
Yeah, I think Sakshi, for FIIs to return, I think it would be a little early, because I think as all of us know that the Fed Governor Mr. Powell has said that after the recent rate hike, possibly another rate hike in this year is possible. So I think as and when when there is a pause in interest rates in the US, possibly that is a time when you could see some flows coming back to India. I think on a very broader basis, I would believe that after November or December, we could see flows coming back in 2024. But 2023 is going to be challenging. I think we'll have to depend on domestic SIP flows, which continue to remain strong. And I think FIIs would continue to pull out money, so that definitely would remain a challenge. So at least in the very near term, one can't expect FIIs to make a very strong comeback, considering that interest rates have started moving up in the US. A lot of money has got shifted to debt there. So I think we'll have to wait for at least another, maybe comfortably 2 or 3 quarters before we could see a strong flow coming in from the FIIs once again in the markets. But longer term, I think they can't ignore us.
Pakistan is fast turning into a no country for Aam Aadmi, with inflation at a whopping 35.4%, a record 57-year high. Even food is out of reach for many in the country. At least 20 people have been killed in stampedes at food distribution centers since the start of Ramzan late last month. Amid all of this, the Shehbaz Sharif government is no closer to securing a much-needed bail-out deal with the International Monetary Fund.
11 people were killed in a stampede in Karachi. They were standing in a queue for free food at one of the distribution centers set by an NGO. This was just one of several such incidents in recent weeks as the country's economic crisis bites. The dead included 5 women and 3 children.
कुछ दिनों से तो वहाँ पे बहुत सारे लोग जमा थे, जिसकी वजह से भगदड़ मची है। उसको मुंतशिर करने के लिए कुछ उन्होंने तशद्दुद किया है, जिसकी वजह से भगदड़ मची है और लोग नाले में डूब के भी मरे हैं और जो है वो भगदड़ मचने की वजह से भी जो है एक दूसरे के नीचे दब के मरे हैं।
At least 5 other people have been killed and several injured in recent weeks at sites in other provinces in Pakistan. Thousands of bags of flour have been looted from trucks and distribution points. These were the scenes over the weekend from Peshawar. Unrest erupted at a flour distribution center, causing people to flee from police gunfire and tear gas. Video taken near the center showed men, women and children running along a street as gunfire can be heard in the background. Some of those running with the crowd can be seen carrying large bags of flour. The horrific scenes were witnessed even as Pakistan registered the highest ever inflation in its history. Pakistan's consumer price inflation index skyrocketed to 35.4% in March, driven by spikes in prices of food, beverages, electricity and transport. The figure is the highest since record-keeping began in 1965. Inflation stayed above 20% from June to January, crossed 30% in February, before zooming to 35.4% in March. The increase in the prices of the food basket is particularly crippling. The past 1 year has seen onion prices rise 258%, tea prices rise 105%, wheat costlier by 94%, eggs up 84%, rice prices up 82%, and edible oil prices rise by 54%. In non-food categories, prices of textbooks have risen 74%, fuel prices are up 72%, and LPG prices are up 63% in a year. The Shehbaz Sharif government is meanwhile completely unable to control the situation. Pakistan's central bank recently hiked interest rates by a phenomenal 300 basic points to 20% in a bid to control inflation. However, talks with IMF for a $7 billion package is nowhere close to completion, resulting in more uncertainty in Pakistan. Bureau Report, Business Today Television.
For more on the situation in Pakistan, we are being joined by Gaurav Sawant, Managing Editor, Strategic Affairs and Defence, India Today Television. Gaurav, first, a political breakdown. Now, this economic meltdown, where is Pakistan really headed?
Pakistan is in tailspin. The consumer price index, the inflation has crossed 35.4%, and this has been the highest since 1965. And this is the holy month of Ramzan. Every day you have one bad news or the other that's emerging from Pakistan, including a number of incidents where there has been utter chaos and stampede at places where the Shehbaz Sharif government is doling out atta or flour for free for people. 20 people have been killed so far. Police had to resort to firing in Peshawar when the crowd couldn't be controlled. And this isn't the only incident that's happened. So whether it's Lahore or Karachi, Peshawar or any other city, virtual food riots are taking place in Pakistan. And this is one part of the story. Even in mainland Pakistan's Punjab province, even in places like Lahore, cases of theft have gone up. People with weapons are now out on the streets robbing people, according to reports that are emerging from Pakistan.
Gaurav, as a strategic affairs expert, how do you view the situation? Is it an opportunity for India or is it a threat?
Given Pakistan's track record, from 1947 till date, Pakistan remains a threat for India. And whether there is a civilian leadership or a military leadership, Pakistan has either resorted to wars, or when it failed in every war, it resorted to terror to deal with India. The only difference now is Pakistan has no money. So can a Pakistan that has no money even to feed its people continue to spread terror? In some instances, it still has money to spread terror in India. Very recently, there were instances of drones being used from the Pakistani side to send in improvised explosive devices into Punjab. Assault rifles are being sent, drugs are being sent. So there is no reform on Pakistan's side. Is there a will to improve relationship with India? There is nothing visible to indicate that Pakistan wants to improve relationship with India. And it is not just that Imran Khan was very hostile. The Shahbaz Sharif government remains equally hostile towards India. That's point one. Point two, to win elections in power, they need to be seen as being hostile to India. And you've seen that from a number of statements that have come. Pakistanis, or at least the radicals and Pakistanis, described as kafirs or non-believers. Would they want to take money from India? That remains to be seen. So as far as India is concerned, there is a wait and watch approach. Pakistan hasn't officially asked India for help, and governments made it very clear, if they seek India's help, like in the times of floods in Pakistan, then a call would be taken once that help is sought. At the same time, would it be fair that Indian taxpayers' money is given to Pakistan when Pakistanis are killing Indians and Pakistani government is taking no action against the likes of Hafiz Mohammad Saeed or Masood Azhar or Dawood Ibrahim Kaskar, all who are ruling the roost in Pakistan?
Infosys founder N.R. Narayan Murthy has spoken about his U-turn from a confused leftist to a compassionate capitalist. Addressing students at IIM Ahmedabad, the tech icon recounted his experiences with a French company and how it pulled him out of his middle-class ideologies.
I learned three important ideas: the power of entrepreneurship in a free market, in creating jobs and prosperity for the nation. Second, the beauty of an enlightened corporate democracy and the role of compassionate capitalism in building a prosperous and happy country. I was also influenced by the writings of Mahatma Gandhi, Max Weber, Franz Fanon, and Karl Polanyi. After learning these lessons, I decided to return to my hometown, Mysore, traversing Western and Eastern Europe, Israel, and West Asia, hitchhiking and spending just $4 to $5 a day. That journey irrevocably transformed me from a confused leftist to a determined, compassionate capitalist.
Well, that brings us to the end of this edition of the Business Today show. Thank you so much for watching. Bye for now.